So on my IRS crypto audit video, Jacob Money commented, OMG, how did the IRS find out? I assume he means how does the IRS find out about people's crypto? In the Netherlands, the IRS is not able to look into your account, so you would have to manually report your profits on your end-of-year report, which most people don't, and so they're basically committing tax evasion. And I'll say, Jacob, a couple things. First thing is the IRS, it doesn't look into people's accounts here either, unless someone's under audit and that their crypto transactions are being audited, and they say, okay, give us all your crypto stuff. So they don't look into accounts. So, and the second thing I want to say is how these things are typically triggered, how the IRS knows about the crypto is because the platforms that people are buying crypto on, if they're KYC, know your customer, they're reporting that info to the IRS. Now, to be fair, many platforms here in the US that people use to buy crypto are anonymous. The platform is not supplied with the user's name, social security number, address, identifying information, and all that. But a lot of these platforms that people were using a couple years ago to earn interest on their crypto, and most of these platforms, or at least the biggest, most well-known ones, have now gone bankrupt and are kind of riddled with fraud, especially in the case of the Celsius one. Anyway, but a lot of those platforms, they were KYC. You had to supply your name, your social security number, and your address, right? And those platforms would send the information about your crypto transactions to the IRS. And I'll show you an example here of what this looks like. Right, so this is saying, and they use the form 1099B, and they say the 1099B data referenced by a box number is reported to the IRS. So this is one from BlockFi, as a matter of fact. Right, you can see that right up here, BlockFi. And so for this taxpayer, BlockFi reported information about the taxpayer's crypto transactions to the IRS. Now, one thing to note, non-covered security. What does that mean? That means for non-covered security, the IRS is only reporting the proceeds to the IRS. Okay? Well, they do these. Description of property, date acquired, date disposed, proceeds, right? But main thing here, they're only reporting the proceeds to the IRS, not the cost basis, what they bought the crypto for. So that means that for this taxpayer, the IRS, all the IRS knows about this taxpayer from BlockFi is that they sold $223,671.26 worth of crypto. Okay, but they don't know what they paid for it, right? So, and obviously, that's what triggers. That's what I was talking about in the video. Why these crypto audits can be so devastating and so frustrating, because the IRS thinks that you owe some huge amount of money, when you actually don't, because you obviously paid something for your crypto. But this is how the IRS finds out about the crypto in most of these cases. And if you don't tell the IRS your basis in your crypto or anything else you sell during the year, right, the IRS is going to assume that you didn't pay anything for the crypto or whatever else you sold during the year, and that they're going to propose to tax you on your entire proceeds. Right. So, and Hugh Whitledge made a great comment on my IRS crypto audit video. The taxpayer is ultimately responsible for establishing their basis in any property sold. The fact that a largely unregulated market like the cryptocurrency market didn't keep track of it for them does not excuse the taxpayer from liability. And that's right. Right. I mean, you're supposed to self-report your basis in things to the IRS. And if you don't do that, the IRS is going to assume that you have no basis, and they're going to propose a liability just based on your gross proceeds. That's what I was talking about in the IRS crypto audit when I showed you the CP2000 and all that stuff. And this goes for other property as well, folks. I mean, we see this a lot with, employee stock purchase plans, right? A lot of folks, they just go based off of what the 1099B says. But the 1099B doesn't know that some of your basis, or you had already paid tax through your W-2 on some of your basis, right? So you got to add what was already taxed as compensation to that 1099B basis sometimes to get your actual basis in the property. When you sell a piece of real estate, right? And putting rental properties aside, we were just doing a tax return for a taxpayer who sold their personal residence for millions and millions, multiple millions of dollars, right? And their gain far exceeded the $500,000 121 exclusion, right? For married taxpayers, $250,000 for single taxpayers when you sell your principal residence if you've lived there and owned it at least 2 of the 5 years preceding the sale, right? And that doesn't have to be continuous. Anyway, well, this taxpayer, they blew away that $500,000 gain. So they have to establish what their basis is in the property because it matters now. Some people think, oh, it doesn't matter, my basis in my primary residence because I'm not going to be taxed on it anyway, right? Well, I guess in some markets where you're only selling your home for $400,000 or $500,000. Well, okay, yeah, that's probably true. But if you're in some of these markets where you're selling homes for multiple 7 figures, your basis matters, and it's on you to have tracked that over the years. Keep track of all the capital improvements you've made on the property, right? Oh, you added another room or something, or you made an addition. Okay, you got to keep track of all those costs, the permits, the labor, the materials, all of that. Because if you eventually go to sell your home one day and you've blown through your 121 exclusion, you're going to want to know that info. Your CPA is going to want to know that info, and if you don't have it, you're going to be owing more tax than you should be, quite frankly, if you had simply kept good records of your things. But yeah, so anyway, basis is important. So thanks for that comment, Hugh. I have some other tax-related stuff here on the left-hand side of the screen. If the IRS is going after you because you didn't report some crypto on your tax return, give us a call. Choice Tax Relief, 866-8000-TAX. That's 866-8000-829. You could also visit us at choicetaxrelief.com, fill out the form there, or just click the free consultation button at the top, and we'll talk. So, all right. Thanks for reaching out. See you next video. Bye-bye.